Welcome to CFO Chronicles, the secrets behind success. The go-to podcast for fractional CFOs and accounting firm owners who want to attract more high-paying clients and increase their revenue. Hosted by James Donovan from 92 Media. This podcast dives into marketing strategies specifically designed for lead generation and client acquisition. In each episode, you'll hear from industry leaders sharing their success stories and expert tactics to help you sign more lucrative clients and grow your business. Tune in and discover actionable insights to transform your marketing efforts and boost your bottom line.
Much for joining us, Ryan. I really appreciate it. I would love for you to just share a little bit about who you are and how you got started, and for those who are a little unfamiliar with, fractional CFO, what's that all about? What's that entail?
Yeah, so I think I've been a finance executive level person for the last 8 to 10 years, different industries, manufacturing, most recently healthcare. And decided that there's a lot of opportunity in small business. I've enjoyed small business entrepreneurship myself. I own a couple small businesses, and I've encountered as a CFO so many of these issues that you face when you're a small business owner. So I think the ability to then pivot into, hey, I'm a CPA, I can provide these services for others, has led me to basically start to generate leads for my firm, try and actually acquire new opportunities with new businesses that might need bolt-on help. And, a lot of them can't afford a full-time CFO. A lot of them need some bookkeeping help through some advisory type of work. And so our firm has been able to provide a cost-effective solution to get that expertise. And so, we're trying to generate, good clients that need this help, that don't want to pay a full-time person. And with the way technology works, the way that we can do things via Zoom, via automated reporting, and some of the tools you can connect to even the existing accounting systems, it makes it a very valuable service that we can offer.
Awesome. You mentioned you had a couple businesses prior to this one. What were you doing before getting into becoming a full-time fractional CFO?
Yeah, so I was always a W-2 early on in my career, working for a manufacturing company that built, we tested HVAC and automotive components. So we had a million parts running through. We built all these machines that would do efficiency testing and things like that. So a heavy manufacturing background. I got into healthcare. It's been a family avenue, I guess. My dad has been in healthcare for my entire life. And so there was a couple opportunities for me to jump in a business in which we basically sell everything post-operative surgical. So, and a lot of it is related to insurance billing. So I went from manufacturing to healthcare. And then I always had a firm on the side, but my firm was always doing bookkeeping work. I've been a CPA for all of that time. And so I've been able to provide some services outside of the scope of my normal day-to-day activities. And then most recently, last year we acquired a street sweeping company in California. And so that's been really fun to grow as an owner. I provide the same service to that business. I just hold an equity position. And so I think that's actually an avenue in the future for my company, is where it makes sense in an industry that I understand, have competence, and can provide value, kind of manipulating that engagement to be an equity position, maybe a buy into a business opportunity that I can help provide greater efficiency, greater profitability. Ultimately, if the business is held for sale or whatever it is, that'd be really cool to participate in. So
Awesome.
that's kind of the recent trend.
Okay, cool. What advice would you give to someone who's considering getting into the fractional CFO space?
So far, it's been very relationally driven. So I think you can have all the expertise in the world, but if you don't connect well with the potential client, it makes it difficult for you long term, because it's hard to communicate that value. You want to make sure they feel that there's ongoing value. Cool, you can rework their chart of accounts at the gate. You can provide these metrics, But if you're just providing automated metrics, there's no relationship with the client, there's no communication back and forth. They're going to quickly feel like, why am I paying, for this premium service potentially? And so I think just navigating the relational component is super important. Having chemistry with your clients is something that I think is important to vet early on. So if you can find ways to do small, like I've had a couple engagements where it's been more beneficial to both parties to start small and say, hey, these are the couple of items that I could use your help on. And let's not build this extensive. I'm going to start taking over your finance team. I'm going to start reworking everything in your business, because it gives you that chemistry where we can start to figure out, do we work well together? Do they like me as part of their bolt-on executive team? Do they feel like the advice I'm giving and the ideas that I have and the process changes that I want to implement are going to positively impact their business? There's nothing more frustrating than having this vision for what would clearly, make their business more valuable, more efficient, less of a headache, better cash flow, and they don't want to engage that. And so I think that's where I'm like, I'd rather do bookkeeping than try and provide a high level of expertise in that area. So I would say just know that it's a longer sales process than a bookkeeping engagement, because you're trying to connect with these clients to provide a value that is a higher dollar per hour, right? So you need to be able to communicate that value well.
Okay, interesting. And generally, you should see a potentially a longer retention with fractional CFO clients more so than with bookkeeping clients. Is that fair to say?
I think it depends on how you set it up and how you want it to go. Because I do think that as if you can help jump into a business that's struggling and show them a way to profitability, better valuation, whatever that might be, then I do think that they're going to stick around and they want to work with you long term. And that's been my experience with good clients of mine, is that they trust you. They want you to be involved in their decision making as they look to add product lines or different segments of their business. But at the same time, well, I guess if you're preparing them for sale and they sell, then you're probably, hoping that they start a new business or something like that. But I do think that they're long term if you can set it up right and continue to provide consistent value. I found that the fulfillment element of any engagement is super important, that I need to do what I say every single month consistently for all time, basically, in order to maintain good customers, because they will start to read between the lines. They're not paying attention. They're not focused on my business, and we aren't. I do think in some ways bookkeeping can be easier, but you obviously don't have the value proposition that you have as a fractional executive. And so, yeah, cool. Can you maintain a $500 monthly bookkeeping client? Probably. But is it more lucrative to provide additional value and expertise? Absolutely. And is there a way to maintain that long term? Yes. And I think that comes with consistent performance, consistent communication, having your processes dialed in so that the customer's getting a consistent value.
Okay. How do you go about when you bring on a new client, setting the expectation for, and laying out the roadmap of certain milestones and what they can expect from your services?
Stay with us. We'll be right back.
Feeling like your growth has hit a plateau, even though you're putting in the work? Maybe you're attracting clients, but not the high-end ones who see your true value as an advisor. Or you're stuck in compliance mode with all the big wins happening just a few months of the year. I get it. It's frustrating. And it's not how you envisioned your business evolving. That's why I'm offering a strategy call designed specifically for business owners ready to break through these barriers. This isn't just about leads. It's about creating a strategy that aligns with your marketing, personal brand, and sales approach to attract clients who pay what you're worth. Imagine starting the new year with a clear plan, a stronger personal brand, and more high-ticket clients. If you're serious about taking things to the next level and want a true growth partner, now's the time. Visit accountingleadsnow.com or click the link in the show notes to book your strategy call. Don't let another month pass by without a roadmap to achieve the results you're after. I'm here to help you make the shift.
Yeah, I think I've probably learned the hard way and not doing that many times. And so I think new clients will get a clear understanding of the scope I think scope creep is inevitable if you're just trying to win business and you don't really have a niche, you don't really have a direction, you haven't clarified your internal processes. So I think early on, we probably didn't clarify scope enough. And I think the clear expectations call out a lot of things that are maybe not part of the scope as well. So I think we've started to say, hey, here's what we've agreed to do. These specific things we're not going to do because they come up in every engagement. You know, you're asking for tax advice. We're not necessarily going to provide tax advice. We can help you strategize. We can help you do these things, but you know, this is part of the engagement. Or frequency of communication is a big one. Like, I obviously have multiple clients. So what is the expectation around my availability to you? Can you text me every single day of the week? Am I going to respond within 30 minutes? You know, what does that look like? Am I calling as the fractional executive? Am I calling your customers to collect payment, you know, within a week after invoicing or whatever that might be? So I think setting those expectations are hugely helpful. And then it does help, you know, you're not feeling like you're playing from behind in the sense of like they're always evaluating, is the cost worth the value? Well, you've clearly outlined why is your engagement this price? Well, it's because of these things that we're going to be covering on a routine basis. And so that's how we operate. So it's been helpful to clarify that.
Okay, awesome. Yeah, I think expectation setting is massive, and you're not the only one who's learned the hard way. It's something we're still improving as well, because that ultimately, I think, really increases the lifetime value of your clients and the relationship you have with them. And if the expectation isn't clear, it just leads to so many murky conversations and going down the wrong path.
It's easier said than done too, because you want to continue to provide like, oh, I got expertise in this area or whatever. And so you could quickly be volunteering yourself for like, okay, we're going to do a software integration, you know, into this new platform. And you're like, well, we really need to clarify how much time this is going to take and the cost for doing that. But you want to help. And so I think that's a good thing. Your clients appreciate that. But at the same time, it's navigating that strategically. So you're not nickel and diming them for everything, but at the same time, you're capturing the value for the advice you're giving them or the process you're implementing.
100%. Ryan, what would you say has been one of the biggest hurdles you've had to overcome since starting your fractional CFO business?
I think outside of clarifying expectations because of the time commitments, it's just balancing the number of clients that you can take on at various levels in an engagement. So I think, you know, how do you take on clients where you're going to be walking through bookkeeping, through advisory, through tax advice, potentially even being the liaison between, you know, their business and the tax CPA, where you're involved in weekly meetings, executive meetings, all of those things. And so like kind of mapping out your workload so that you can actually fulfill at a high level, I think has been something to navigate. And then secondarily, I think it's a ongoing battle is, okay, what if I'm at capacity and I'm trying to grow my fractional firm? Well, that requires high level employees within an organization. And we're not at the point where I'm like adding other CFOs to the team, but I think that is quickly going to become an issue in terms of competency. Like, sure, can I hire bookkeeping team? Can I train them effectively, give them SOPs, allow them to do solid work and have accounting managers? Yeah, that's fine and well, but how do we get guys, you know, people on the team that can go to the next level where I can say, okay, this client, you're going to be responsible for their fractional CFO engagement. How do we scale that effectively so we don't have a, you know, the quality isn't there across the board when my capacity is reached. And so I think scaling that long term will be a definite challenge that needs to be overcome. And then I think diversity, like just personally in my business, I want to have diversity in my revenue stream. So I do think like pursuing some kind of bookkeeping engagements are helpful. I do think that pursuing some of these, you know, potential tax conversations is helpful as well. And, you know, there's other things that come up year over year that we can provide financial services to address. So I think scaling with the appropriate staff will be something that we need to navigate for sure.
Yeah, the delegation, it's a huge challenge for business owners. You can get so far on your own, but then like you mentioned, especially with fractional CFO servers, like your expertise are capped and your time is capped. So if you want to keep growing and bringing on more clients, like you can't add more time to the day.
You
Well,
can't. And
the best way to do that is hiring team members to help you. That's essentially how you're adding more time to the day.
and you got to be ready and confident, because I think every business owner like if you're a solopreneur or you're by yourself, you struggle with the idea of like giving up that revenue, I think. And so I'm always like trying to figure out how I can make, additional income personally. And then you get to the point in your business where like, okay, I have to scale this. I have to give up some of that to hire competent people on my team, delegate to them. I need to do it effectively. Otherwise, I'm just wasting profitability, and then build from there and hopefully increase the volume overall. So I think that there's a little bit of selfishness that you're trying to overcome. It's like, personally, I'm doing well, but I want to have an organization that's better than just the capacity that I have or the hours in the day that I have. And so how do I jump to that next level? And I think I'm not saying I've made it. We're there. We're not even close. I'm conscious of that now at this point. Like, man, if I don't want to grind 60, 70 hours, I got to find people that can help me.
Yeah. Well, it's about having a system that's running when you can step away
Mm-hmm.
at the end of the day. If that's what the goal is, right? But it is nice when you can step away and, you know, if having 70% of the business run without you is the goal, it's pretty cool when that's taking place. And then
Mm-hmm.
we're still working towards it, but being able to 100% step away and everything
Yeah.
runs. I mean, I think that's the ultimate goal for time and financial freedom. What about what are some wins that stand out from since starting your company? What comes to mind for like I'm super proud of this?
Yeah. I think just getting traction in the industry that we have expertise has been rewarding. So I worked a long time in a specific healthcare niche, and then for other people to come and want to work with me in that same niche because I can provide that value. And then seeing, hey, I've dedicated a significant portion of my career to these processes, and being able to achieve economies of scale across that industry is super rewarding. Because now it makes the conversations a lot easier with clients, because it's like second nature to talk about specific business markets and things like that. I can provide that value just in a 30-minute phone call without even thinking. The prep time, goes down. And so I think that's been rewarding, people sticking around for the first. So my firm's only been like aggressively marketing for the last year and a half, 2 years. And so I've seen, just those clients that we brought on early on sticking with us, that still want to work with us, that trust us. That's super motivating. And then I think being able to add to the team is a big win. Like, bring people on, train them. I think I'll say by the end of this year, my crowning achievement will probably be my Notion SOPs for everything we do, building that out, because that will allow me to step back and say, I have quantified every task for every client. I have standard operating procedures for 90% of the work. Obviously, you see weird one-off stuff happen all the time, but to be able to then fully focus on new clients, existing clients, meeting with them regarding their business, their strategy, all of those things, without having to worry about, hey, did we receive the correct payment against the correct invoice? Those things will be um, really, they're making huge strides. And so I'm really proud of the processes that we've implemented, but, more to be desired there long term. But yeah, those are some big wins. And then I think recently just pulling in some new fractional clients, some fractional CFO clients that have been um, pretty receptive to the things that we're doing. And we need to continue to refine our deliverables and make sure that they're providing ongoing value. But yeah, those are some examples, I think.
Okay, awesome. A question I have for you, there's a lot of other businesses that we speak to. Everyone relies a lot on referrals. They're always going to be the easiest to close. They're the best type of client acquisition, but you need to have a lot of people speaking about you, and you need to have a lot of other businesses who like your service. What can you say about closing new clients who aren't that referral from an existing customer? Like, we've been doing some work together on LinkedIn. So
Yeah.
can you comment on closing leads that are coming from that cold outreach that turn into a pretty hot lead from an appointment, and then walking them through the process and closing them?
Yeah, I think referrals are easy, obviously, especially if they're within the same industry. So you just know what the customer expects. You could speak the same language. I think the success that I've had in the cold outreach side is the questions that we ask that I get the problems early on in the conversation. I get a context of their business, and because I've had experience across so many different industries, I can usually find some kind of platform, some kind of software solution, some kind of inefficiency that they're not aware of, and then talk to our process and walk them through how we can benefit them and provide value. I think I do a lot of listening early on in these discovery calls because I want them to expose, what is the issues that they've seen with prior, like every company has had some kind of accounting support, whether that's a bookkeeper that they paid or, they had somebody on their team. And usually if they're looking, they're unhappy with something from the prior engagement. And so weeding that out is a priority. What are some of the issues that you faced with your last bookkeeper or accountant or fractional guy? What did you like? What you didn't like? Being honest and transparent about our processes so that they understand what they're getting into. I'm not much of a schmoozer. I'm pretty sincere and technical. And so I think I find success in these conversations talking through technical subjects. And so if it is specific practical solutions to problems that they have and giving them a little taste of what it would be like to work with me is helpful. And so I think there's a relational component. I don't think of myself as somebody that's, I think the stereotypical accountant that's very introverted, doesn't want to get on a phone call, doesn't want to have a conversation. So just being sincere, technical, and having the ability to be relationally engaging in that first call is helpful. I like to do Zoom calls because I think it's helpful to see faces and them to see me, understand what we're about, and go from there. So that's how I've had success so far this year. And obviously you get people that connect with you that are not interested in your services, that want to sell you something. And so navigating those in and amongst the actual leads, getting to the root of the issue, and then even finding problems in their business that they didn't even realize need a solution that I can solve, creating some kind of problem that they're like, wow, I didn't even think about that. And then providing the engagement letter that can solve that problem is helpful.
Nice. Yeah, a lot of what I'm hearing is really just uncovering what their problems are, and having them, like, you're just extracting that information from them. They already know it deep down, but it's getting them to see that problem, and then you highlighting the solution. I really like how you also ask not only what did you not like about your existing CPA, what did you like about working with them? Because I think it positions you in a place where, like, hey, I'm here to help. And that's
Yeah.
not just me hopping on a sales call.
I mean, it's really just what value do I believe our firm can provide? Because that's the proposition. If it's like increased profitability, they're probably going to pay. Like if I think that I can provide, let's say they're trying to sell their business, we can quantify what additional dollars in revenue or profitability would equal if they're trying to sell their business. And so that creates a clear pathway for me to say, okay, well, here's what we do. Here's how we can drive you towards that goal. And when you're justifying the cost of bringing our firm on board, it's well worth it if we can meet that desired goal in terms of like a better multiple or increased profitability, or you're the owner and you want to take home more money every month, whatever that is.
Yeah, sweet. When you go to put together proposals, because every business you meet with is going to be different, are you able to share a little bit about your pricing strategy and how you find the right fit, and you are able to be successful with landing new clients based off of the proposal you put in front of them?
Yeah, I would say that I'm not one who has restricted who I want to do business with based on a specific industry niche, product, service type. We want to grow our firm, so we're trying to generate new revenue. Obviously, there's going to be clients where we'll pass, but in most situations, if it is as low as a bookkeeping engagement up to fractional CFO, we will put together a proposal. I also think that our selling point is our adaptability to software applications. So I'm really software heavy, industry specific as well. So like as an example, we'll get involved with interior designers and we know all the platforms that they operate on. You know, they might choose from one of 10, but we have experience operating those systems. And so a lot of these new third-party softwares that are specific to industry, they will be really good for invoicing that particular customer type. And so our adaptability to jump in, use those financial systems as an extension of the general ledger allows us to customize these proposals based on the industry we're in. I always tell my team, like, all of these softwares are just a different face with the same data. You know, they have a different user interface, but ultimately, if they're using QuickBooks Online, they're just feeding a sink of information over. And so we like to help in that regard. So I think we get customized in that. And sometimes that involves pricing in a software component where we would actually deploy a new software system for them. Like I would sell, hey, you need to be using this platform. Here's why. And then here's the integration cost. We can set that up for you. We'll link it with your financial systems and then give you the tools to operate that on an ongoing basis. And we'll support the financial reporting backend. We'll do bookkeeping only engagements where we are not engaged in that third party system. I would say for bookkeeping, like as far as pricing strategy, I'm probably not cheaper than $500 a month in an ongoing bookkeeping engagement. I do think there's tiers to bookkeeping where most bookkeepers are probably using QuickBooks Online. Obviously, there's some other platforms, but as a frame of reference, they have class and location data. So if you're a business that is looking to track by different locations and you want to see a P&L that's, you know, sliced and diced so you can determine profitability by, you know, state to state or this physical location, that's a little bit higher level of granularity that you need to see. You also have class data, which is even more. And so we really try to determine like what is actionable data that the client wants to see. And that will dictate how we structure the chart of accounts. It'll dictate how we, you know, structure all of the data in their system. And that will affect the bookkeeping component because now not only do we need to get account categorization correct, we also need to make sure that we're appropriately allocating it to the right location or class. And so that's where the bookkeeping can go up, you know, upwards of $1,000 a month because we require that level of granularity. And that's purely dependent on the client. Some people think they want that level of information and never look at a financial statement report that we send. So I would recommend, you know, let's start simple and then build from there. And then we take it up to, you know, basic advisory, I'd say, is the second tier where we have high level bookkeeping. We add advisory services. What I think that looks like is primarily generating KPIs and dashboards, maybe some cash flow reporting that we can review on a specific cadence with the client. And so that might be weekly, that might be bi-monthly or monthly, where we're having an in-depth deep dive into their information, their data. And so I don't like to do advisory too much without having access to their bookkeeping or at least giving input into how they structure their chart of accounts. Otherwise, we make no headway. The data is bad. We can't generate really solid reporting. But we do have a lot of options where we can automate some of that and give them dashboards and things that they can view throughout the month. And then we have the, you know, higher tiers, which is the fractional work where, you know, I'm taking on the entire finance production of their business, whether that's accounts receivable, accounts payable, etc. And all of those are very differing scopes depending on the type of business. Like a service business is much different than a manufacturing business in terms of total purchasing of inventory volume. You know, some of these businesses are cutting purchase orders every single day. Some are doing very low inventory just on a credit card. And so I think we have to kind of do our due diligence in tracking the estimated time that it takes, but we do fixed engagements and we kind of build it up as you add those services. And then we also provide back office payroll services along with HR. So that's another bolt-on component. Do you want us to help manage your payroll? A lot of times people want specific wage data that they don't get because they have the wrong payroll system. It doesn't integrate into their GL well, so they can see, you know, hey, these are the sales dollars being spent on wages going into the gross profit calculation versus just general overhead expenses for wages. And so, people can get a lot better data than they have. They just don't know the system that they're using isn't the best. So we walk through all those things. And then I would say because of the customization of our proposal, it gets well received because we're solving like a specific problem for them. So that's a lot to say in summary. We address the specific issues that our clients are facing with specific software / financial process solutions, and then can manage that entire process for them.
Okay. Appreciate you sharing that. What are your thoughts on the 1% gross revenue for the retainer model for fractional CFOs?
I think it's probably, so like if they make $1 million, you get 1,000 a month kind of situation.
Yeah.
I think it's too broad, to be honest, because I think that in some businesses that's super reasonable. Like some businesses are so simple, they operate just in QuickBooks Online. The way they invoice and collect payment is simple. The way that they transact expenses is simple. All of those things. I think it's too broad to just say that's a good benchmark, because what if they have sales tax obligations and you want to help fulfill that? What if they have, they're selling products? What if they're buying raw materials? What if they're a little manufacturing business that's pushing raw materials into completed goods and then, selling those items? And how are you tracking all of that information? Are you using QuickBooks, other systems? So I think that's not something that I would use to calculate necessarily. Now, I think there's a reasonable percentage for a bookkeeping, like a simple bookkeeping contract where you're just doing, you're managing the bank feeds in QuickBooks and categorizing transactions and giving them a clean P&L and balance sheet on a monthly basis. And that is usually going to be dictated on transaction volume, but usually transaction volume equates to some reasonable revenue figure. And if it's like, there's businesses that do $1 million in gross revenue on very few transactions. So you have to even be careful there. I don't use that as a rule of thumb. I can understand it for bookkeeping.
Okay.
But what we're doing, I would say, has a little bit more specificity. I would do low level bookkeeping, like just very basic month-end reporting, all of those things. The engagements we are typically getting have a level of like, we're doing class and location tracking, we're doing job costing or project costing. And so I think that it's more of a time commitment, especially if we're involved in procurement or purchasing and we're reconciling purchase orders to bills to receipts of items and things like that.
Okay. Is it fair to say it's a good starting point and then build on top depending on the complexity of the business? If like, because there's a lot of people we speak to that really struggle with where do we price? How do we come up with our pricing?
I will say this, to be honest, 1% of like $1 million, if I was doing fractional work for $1 million company at $1,000 a month, I'd probably say that's too low.
Okay.
From a fractional CFO perspective, depending on what the scope is, but my assumption is, let's just take a business, say they're healthy, they're making $300,000 a year, whatever it is. 1,000 is so cheap for an employee. Like an employee cost is going to be, a US based employee might be like 4,000 to 5,000 a month if they're making, 20 to 25 bucks an hour. I don't know, with the payroll taxes, insurance, all that stuff. So I think the justification to get a fractional CFO at $1,000 a month is a pretty low rate, in my opinion, for a CFO level guy. Now that may vary from expertise to expertise, industry to industry, but I would probably start bookkeeping there. I would probably be a lot higher starting fractional CFO work.
Okay, interesting. And then last question for you, Ryan. You've been very successful closing some of the leads and appointments we've been able to send over to you. We were speaking, they're different from referrals. What's your follow-up process like post-sales call? Because I'm guessing not everybody, you just hop on and 30 minutes, they're a client. So are you able to walk us through what that process looks like?
Yeah, so I don't pay for a CRM necessarily right now because I'm not getting hit with hundreds and hundreds of referrals every week. I wish that were the case, but I follow up immediately after the call, and then I use Superhuman for my email, which is the best $30 a month I've ever spent. Little plug to that email client. But I have those, if they do not respond to me, I have a cadence in which those return to my inbox, and then I send a follow-up email to kind of keep the pressure on as far as, hey, we engaged, we had a good conversation, we talked about these things. Here was the kind of the follow-up. And you talked about, hey, give me 2 weeks because, I'm about to launch this business and I want to get things set up, new QuickBooks file and, whatever it is. And so I've done that. But that's primarily it. I will make some outbound phone calls if I don't hear back and we had a good connection. Some people, it's probably unlikely post phone call that you're going to actually get to the proposal phase. And so those I'll just keep via email. But if there's people that I felt like engaged well, they have a problem that I can certainly solve with my services, then it's some follow-up emails. It's keeping them aware that, hey, we're waiting and we can help you, and trying to communicate that value over time.
Awesome.
So maybe that's archaic, but yeah, it works. It shows up in my inbox. I send a follow-up email and keep it going from there.
Sweet. Super helpful. How can everyone find you if they want to get in touch with you?
Yeah, I'm on Twitter. It's at ShackACCT. That's ShackACCT. And then my website is the same, ShackACCT.com. So Shack Accounting, and they can ping me there. Usually on Twitter is easy. I'm on LinkedIn, Ryan Shackelford, and you can find me there as well.
Perfect. Awesome. Really appreciate it, Ryan. Thanks for sharing all that information. And
yeah, you got it.
Enjoy the rest of your day.
Yeah, thanks.
Thanks for listening to CFO Chronicles, the secrets behind success. We hope today's episode provided valuable strategies to help you attract more high-paying clients. Be sure to subscribe, follow, and share with fellow professionals. Connect with us on LinkedIn and leave a review or comment to join the conversation. Your feedback helps us bring you the best insights in finance and marketing. Until next time, keep striving for success and unlocking your business's potential.